Welcome to the Market Alert for Monday, 28th of October 2019. So as we see here, Bitcoin leads momentum as top cryptos trade below key price average. Yes, Friday of last week, as we looked at before, the market consolidating. And then on Friday, if we look at the daily chart, the market moving higher. Not all of it in the day session, some of it overnight. And we seem to have broken out of this malaise and consolidation. We've got the daily chart above the 200 MA now, and also the 4 hour. You can see the buying coming in there and moving and trading and closing above, followed by some selling pressure. Big move over the weekend, and then prices are now consolidating. But we've got the volatility back, and this is great news. So on Friday, we saw prices move higher. You can see this here. We were sideways, very, very quiet. And as I said and did, stayed out. The market then moved slightly higher with a bit of movement. But then late on in the afternoon, the market just exploded. When you're not looking, this is what Bitcoin will do. And you see prices moving higher there. And this continued in the early hours of Saturday morning. Again, when no one's watching, they move the market higher. Prices there finding support at the 20 bar moving average. And then through on Saturday, the market seeing profit taking coming back into this market as traders got out, and then buying back in support here where you can see these spikes. Nice trading ranges and volatility. This is what we've been waiting for here. And then yesterday, Sunday, which is usually quiet, you can see the market moving higher. Again, the 50 bar moving average holding the market. Prices closing back above the 20 bar moving average and moving higher there. And then, of course, we see some profit taking, but only down to the 50 bar moving average. And again, once we close above the 20, the market trades up to the R1 on the overnight. At the moment, price is consolidating. And if we have a look at what is going on overnight, from this low to this high, the market is just below the 76% retracement. And also the DP level is here. The 200 MA is here also. So if prices come lower, watch for some testing around here, and then possibly moving back to the upside. The DP level is important as well. Prices will need to get back above this, as well as the 200 MA there. But certainly some volatility coming back into this market. And typical of Bitcoin, doing it when no one is looking or expecting it. Meanwhile, in the stock market, as I've said for years, they want the market higher. It was squeezed higher by the shorts on Friday. Those that are short trying to go against this, and it's pointless going against this market. They want it higher. That's why they're printing at the moment. The money's finding its way into the stock market. It's not making the same sort of strides as it has done from 2009 to 2018 because it is tired, but trying to trade short and hold is very, very difficult because of the administration and the government in the US wanting this market on the upside. So let's have a look and start off with the daily chart. We can see on Friday the market trading up to the 76% retracement. Let me just check this is correct. It is. And then overnight we're starting to see prices move as well. We're still not back to the all-time high. We've got a bit to go yet. There's a couple of other areas of support we've got to take out. This one in particular, 27,313. That's where we saw a bit of a correction in this market. Let me just delete that. And yeah, we've got to take out these here as well. Let me just mark these up so you can see. And this week's a big week as well, which I'll come to in just a moment. But here you can see that we've got prices moving to the upside, but on low volume. So it's a perfect example of, the plunge protection team or whoever moving this market to the upside as much as they can to keep the illusion alive that everything is fine. I mean, you have to look at all of the other data and it's not fine, but as long as the stock market's fine, then you will get votes for it, especially from the middle classes who are invested in these arenas. So here we can see Friday, the classic signal. It's an absolute classic signal through the three averages, the DP, high volume, and off we go. And we continue all the way up until we run out of steam here at the R2, market trading up to the R2 level. You get a retracement. We then come back below the 20 bar moving average, trade down for a while, come back. We struggle to get through the 20 bar moving average initially here. You can see prices closing just below it. Then we get through, but we close back below the 50, and then we close for the session where the market then finds support. Overnight prices have gapped higher, which you can see here when they kicked off last night, and are currently, as we scroll over, playing with the 20 and the 50 bar moving average. We've got the 200 MA down here, so if we have a bit of a sell-off to begin with, movement to the downside, then watch the 200 MA, Friday's close, and the DP level for support to bring the market back to the upside. News today is only one, and that's a UK one, likely to affect the pound more than the rest of them. Actually, I don't think there's going to be a Brexit vote, is there? There's going to be a vote on a general election, so I don't know whether this will happen or not. This changes so quickly, thinking about it. Anyway, it will affect the pound more than it will anything else. So if they do get a general election or any sign of a general election, then the pound will is likely to move to the upside because of the impasse that is in Parliament at the moment. It needs something to break the deadlock. Meanwhile, the pound on Friday, you can see that we had the market moving to the downside, coming back 76%, and then moving lower. We're already at the DP level here. I don't know why, but the annotation stopped working. So yeah, you can see we've got 76% retracement there at the DP level, and then prices just trading sideways there. Right, speaking of news, busy week this week. We've got, this is the main event. This is what the market's waiting for, and in particularly this, a cut in interest rates of another quarter of 1% for the market. So we get that, we see the market move to the upside. I would imagine, you can't guarantee these things anymore, but that's what the market's been after. Going from incredible, just from July when everything was absolutely fantastic. All was well with the market. There was no need to reduce rates or print money. And now we are printing colossal amount of money in the repo market and 60 billion a month to buy treasury bills. They say it's not QE4. It is QE4. It's just that they don't want to call it that because it will create a panic in the market. Also on Friday, we've got non-farm payroll figures. These are going to be out as well. You can see there the forecast is 90,000, previous 136. I think this is being rigged so that it comes out better, and then they can bring the market up on Friday as well. A few other things before we conclude. Implied volatility was just slightly higher. I haven't updated the figure here, but just slightly higher on Friday, which is interesting. Think about it logically. This is quite interesting. It's only just up a smidge there, but the fact that it's marked up as prices are moving to the upside is an interesting one. I think there's a bit of caution there as well, just in case the Fed don't drop rates. A bit of insurance going on there. And the 10-year, 3-month 10-year yield. Definitely moving to the upside now. No more red ones. So yeah, recession within the summer of next year is what this is showing. And on that note, as we head into this week, it will certainly be interesting to see how things pan out. Very exciting week, a lot of volatility around as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.